Welcome to the Go Big with Gib podcast, where we talk to professionals, business owners, and entrepreneurs about their big wins. Hey everyone, and welcome to this episode of Go Big with Gib. Today we're going to take a little bit of a detour from our typical subject matter. We're stepping away from the topic of real estate investing to talk about another asset class that's relatively new to me, cryptocurrency. Why cryptocurrency and why now? Because I think April of 2025 might be a killer time to invest in crypto. And I've got three big reasons. Let's dive in. All right, reason number one is President Trump has promised to create a strategic crypto reserve. Now, I'm used to analyzing multifamily deals, not government stockpiles, but this caught my eye. Trump's been pushing to make the U.S. the crypto capital of the world, and in March, he laid out his plans to hoard Bitcoin, Ethereum, XRP, Solana, and Cardano, starting with 200,000 Bitcoin from seized assets, worth over $17 billion today. He even hosted a White House crypto summit to hammer it home. Details are still TBD. Will they buy more or just sit on it? But as a guy who's built wealth with multifamily projects, build-to-rent projects, and medical real estate, I see this like a government-backed lease on a prime asset. It could legitimize crypto big time and drive demand through the roof. Reason number two, Bitcoin and Ethereum prices are low. Well, relatively low. Look, I'm no crypto guru yet, but I can spot a deal. As of April 4th, 2025, Bitcoin's at about 82,000 this morning, down 25% from its peak in January of 109,000. Ethereum sitting at $1,800 per coin, a steep drop from December 2024 when it was at 4,100. In my world of multifamily and medical real estate, this feels like finding a distressed asset in a growing market. Sure, it's not dirt cheap, but compared to where it's been, it's a steal. Crypto's got a history of bouncing back in dips like this, and I'm starting to think buying low could pay off big, just like snapping up a value-add property before the market turns. Reason number three, the big dogs are warming up to it. I'm talking about institutional sentiment, which is shifting. Beyond Trump's reserve, Wall Street's jumping in. Hedge funds and banks have piled into Bitcoin ETFs late last year, and with Trump's SEC easing off lawsuits against exchanges like Coinbase, the vibe is changing. Plus, there's talk of a Fed rate cut later in 2025, which could juice up assets like crypto. For me, this is like watching developers swarm a newly zoned area for multifamily or medical real estate. When the heavy hitters move in, prices tend to follow. It's a signal that I can't ignore even as a crypto newbie. So there you have it. Trump's reserve play, bargain prices on Bitcoin and Ethereum, and institutions piling in. Is crypto as safe as real estate investing? No, not at all. It's volatile and things go up and down. But the upside, it's got my attention. I'm dipping my toes in, and maybe you should too. So that's it for this curveball episode of Go Big with Gib. Next week, we're back to talking real estate investing. But I'd love to hear your thoughts on the crypto detour. Hit me up on X or wherever you listen. Until then, keep thinking big. Thank you for listening to this episode of Go Big with Gib. If you haven't already, go follow us on social media at Gib Irons. We'll see you next time.